Good day, everyone, and thanks for joining us here in the charts. You tune into the Market Beast edition. It is your fellow compadre speaking, yeah? Today we'll be exploring a very beautiful instrument that goes by the ticker symbol of, is this an instrument? Gold spot USD pairing. The ticker symbol is Xauusd. I found a pretty interesting story that I'd like to explore with you all to determine what could take place in the market. This is not a bearish nor a bullish video on gold, but it's definitely to kind of keep everything in line in what could take place in this market over the course of a few weeks, months, or even a few months or so. So stick around until the end, and of course open your minds, please, before we get started. I think we have to spray some repellent spray first. That's my ape and gorilla repellent spray. We get some money back guarantees. So we've seen if it works in the comment section and the appropriate thumb section as well. So let's go ahead and get started here. And yeah, it's a beautiful story. So let's go ahead and dive into the charts here, shall we? All right, so today's March the 23rd, 2021, and the current price of gold spot is going to be $1,728.32. It's down approximately 0.6% for the day. Okay, ladies and gentlemen, welcome back. I'm sure you guys are doing well. Hopefully you are. I want to show you something that I found. These are the weekly candles. Oh, man, the visibility is not that good, but here's what I'll do. I'll just kind of change the week so it's okay. There we are, ladies and gentlemen. I'd like to present to you what I found. Here it is. All right, that's one part, and then we have the exponential moving average. That's it. So beautiful. So what you're looking at on the screen is, I'm going to explain everything right here, and I'm going to crank it down to the weekly because it's tailored towards the weekly setup. But I just want to explain to you. So the 1708 days is obviously the run up. So I want to make sure that we're actually comparing apples to apples. What I'm doing is comparing to the most recent run up. So what I've done is I've measured from the most recent higher low at this area here, represented at about January 2016 at about $1,071, and we're kind of measuring it all the way up at the most recent high. I can't say that's the most, the actual top out, and it's going to collapse, but that could be measured at about $2,072. Okay. So that's basically what I'm going to measure, like this area here, in comparison to, we're kind of scoot to the left a little bit here, and we're comparing it to what has taken place in the past, which is not 100% guaranteed to play out. This is just a reference that we're going to go by to see if we can understand what could take place next in the story. Okay. So this area, of course, 1,708-day run up is what we're comparing it to. And let's just kind of zoom in here. Let's pull up our weekly candles just so we can kind of zoom in to show you all why I've first measured the days that it ran up. So since we're comparing it to what has taken place in the past, this run up here, you can't really see the candles, but we're comparing it to this run up here as the market continued to thrust and ease. And we're just kind of zoom in. And what we're going to be looking at is this white line, which I don't think I've explained. This white line represents the 50 exponential moving average on the weekly chart. Okay. So if you want to pull that up on your chart to kind of see what I'm looking at. And what we're looking at is a 4% move to the downside, represented on this orange circle. It represents 4% down after the weekly breaks down below this 50 exponential weekly moving average. Stick with me. I think it makes sense so far. All right. And now this purple circle represents the same thing. When the weekly breaks down below this 50 exponential moving average, it goes down a total of 6%. And of course, you can see here in this clustered area of price action, it finds support from the buyers, and then it re-challenges this 50 exponential moving average on the weekly, and then it breaks above that 50 exponential moving average on the weekly. And notice what happens. It comes up to this red line. And this red line is important as well because it is the previous level of resistance. This is the most important line that gold needs to get back above. And must, whatever important word you need to use, but it truly, it's essential. It needs to get back above this line. And just say the number already. Sheesh. All right, it's $1,781. If gold does not get back above this line, you see what happened. I can't make that up. Look, you see what happened. Gold came up to this line. You can see like the most recent high, September the 5th, 2011, when gold broke above this red line, it broke below that line, and it found a triple top. You see that? November the 21st, 2011, top. And then right here, February the 20th, 2012, top. And then right over here, and on September the 24th, 2012, top. Triple top, and you see what happened. It just like, whew, had a nasty move to the downside. Let's go ahead and measure. I don't think how much I measured it. So from that triple top to the lowest point, let's just go ahead and measure the lowest point that we've already said we're going to use as a reference point to start the 1708 day run up. So let's just see how much of a percentage decline that was after triple top in there. So that was 41% to the downside. Now, this is not a video saying that gold is going to go down 41%. This is a video saying that gold must get back above this red line. I've just showed you how essential or how important, whichever word you want to use, that gold needs to get back above this line. Okay, let me just give you the exact number. It's 1783. So if you notice any type of price activity, that's a, because I don't think there's like a multiple different exchanges measuring this. It is 1783. That is the number. Let's scoot it on over to present day, or the most recent run up that we're comparing it to from the past. 1708 days has the price bottomed out. The most recent low, I can't say the bottom. Okay, I know people are saying gold is going to like $100 or $700. I'm not sure. I don't agree or disagree. I'm the neutral party. Okay, I'm not invested. So starting over here at November the 9th, 2015, the price started going up. Beautiful thrust and ease. Good job, buyers from the gold standard. All right, and they topped out at about, again, the most recent high, not top out, $2,000.72. Oh, and before we continue, yes, this is the guy who said gold is going to $2,000, and I was incorrect about that. Yes, let's get that out of the way, in case we get some comments coming in about that. All right. Ooh, sorry. So the 6% down over here. Okay. Notice the price got below. Okay, got below this 50 exponential moving average on the weekly. Okay, so far it's gone down a total of 6%. We've already measured it. I don't even think we measured it over there, but I'll just measure this just to make sure. It smells good. Make sure that we're on the same page. 6.2%. So if gold, just kind of goes down and it makes a retest. Now we've already understand what that means. So I just want to get that out of the way. Let's clean up these charts. Now let's just say gold, this is a fake out. And gold is going to retest the recent lows that can be identified here at about 1696.52. All right, so that would be the level to, I guess, pay attention to. So it's really important if the sellers are in this market, and they're going to retest their strength and push it down at about 16. I'm not saying this is going to happen, but just understand what's going on. The sellers are trying to test the strength of the buyers who just recently stepped into this market. Please erase numbers, guys. I have to say the numbers because obviously the numbers are important to know the levels, but look at this as buyers and sellers. That is it. The buyers have stepped in at this 1696 level. So if the sellers are like, I don't know why you just did that, my friend, but I'm about to push this price back to the downside. And if they do that and the buyers stop them out again, that is a beautiful sign, because that would be technically considered a double bottom pattern, right? Like it'll bottom here, or it's a low. I'm not saying it's the bottom, guys. It's just understand, okay? I'm looking at the story. And if it comes down and the buyers step in again, double bottom, technically speaking. So what happens next? That means the buyers realize, okay, this is our opportunity, guys. We have to make this one count. That's what the buyers would say. And then they're going to double bottom, and then they have to re-challenge this red line right here. Huge challenge in my book. Oh, this is going to be a big challenge. I truly think that if the buyers are going to re-challenge this red line overhead, it's probably in their best interest to at least do some consolidating. Just kind of like, if you can imagine like winding something up to just kind of crank up that momentum and just blast through, just blast through that 1783 and just get back above there. They have to do it. They have to get back above that line to show these sellers, like, back off this price, man. We're gold bugs. We're ripping to the upside. That's what the buyers would tell to the sellers. But the only way that they can even open their mouth and say that, they have to get back above. You have the level 1783. That is the level. Okay, so that's what I'll be paying attention to. I don't really watch gold, but I think it's pretty important that we should probably keep an eye on it, because it's kind of in line with whatever's going on in the economy, right? So what am I saying? If the market goes down to the 1696 level, just understand that the buyers must step in at that level. If the buyers are able to successfully capture the price, if there is more downwards momentum in this market, if it continues up, which if that happens, there had better be enough momentum in this market, because to go from let me just kind of explain this really quickly. To go from this most recent high here, okay, about $2,000, okay, and then for it to just kind of walk down the stairs. Right now, it's just walking down the stairs. It's still in an overall uptrend, but right now it's just walking down the stairs. I mean, this had better be a very aggressive, explosive move, and like it needs to get above. I said it like 5, 6, 7 times already. 1783. I'm not sure if that's on the thumbnail. 1783. It has to get back above there. So the real question is gold going to consolidate below this 50-week exponential moving average? Let's go back in history to see how much time it consolidated below this 50 exponential weekly moving average to just kind of get an understanding of what could potentially take place next, or what is necessary, what took place in the past that was necessary to at least get back above the 50 exponential moving average. Because remember, the red line is the only line for me. I don't really 50 exponential, whatever, blah blah blah. The only level for me, 1783. Whew. All right, so let's go ahead and measure this. It's getting kind of weird. Measure this little small range down here in terms of how much time it took to consolidate below this 50 weekly moving average and break back up. So including the actual breakup, it took 105 days. Okay, so that's just kind of a reference point. Let's just go over here and see if, I don't know, like I said, it's not 100% guaranteed, but what else are we going to reference it by, right? I think this is a practical thing to measure, right? Let's say 105 days is going to stretch out, and what we're going to do is just measure it from this candle right here, this official breakdown, the weekly candles. This is substantial, in my book at least, weekly candles. February the 22nd, 2021. Let's go ahead and measure from that weekly candle and stretch it on over to, what did I say, 109 days? Okay. So let's say it takes 105 days. Is going to be June the 7th, 2021. And if it stretches on over to 112 days, it's going to be June the 14th, 2021. So I'm going to say that it's probably in gold's best interest to either get back above this line within the next 2 or 3 weeks and like really hold. Like, don't just kind of have it a fake out and break back below. No. That would be horrific to the price. Horrific. Like, don't do that, because I remember I look at structure. I look at candles every day, all day, too much. It's messing with my brain now. The structural foundation that needs to take place in the gold market must be sufficient. If the gold price starts to just do this little flimsy little dead cat bounce and it wants to approach this line within the next week or two, back up at 1783, and it gets rejected and it cannot hold the previous low at about 1696, yeah, that's probably not a good idea for the gold bugs to do that. Don't do that. Now, I can't tell you what to do, but just understand that the structure must be formed, whatever the word is. Let's just tilt a box here and let's close this video out. I feel like I'm going back and forth now. Let's do something like this. When I say like June, sometime in June the 7th, I'll just put this box here. We'll leave it there. If the gold bugs are going to, re-challenge this overhead resistance, I'm not going to say resistance, this overhead important line at 1783, then when it is good and ready to re-challenge that level, even if it challenges it within the next 2 weeks and gets rejected, like I said, as long as it respects the previous low, 1696, yeah, it's fine. It's just kind of, like I said, it's winding that momentum cranker up or whatever. So weird. But it must get back above. That's it. I know this could have been explained in a short period of time, but hopefully this lengthy explanation is kind of, it resonates with someone who just kind of struggles with understanding candlesticks or price action. Again, I'm just doing ASMR, and interesting analysis is all I do now. I've downgraded myself from a technical analyst to just interesting analysis because I just can't seem to get it right, I guess. So that's it, guys. Hopefully you're well. Take care of yourselves. If you're new, before you go, and you found this interesting, we would actually love for you to join us here. And I want to send you more information about the alternative markets. We actually cover that throughout the week. So hit the subscribe and the bell. We'll send you that information when it is readily available. And so take care of yourselves, protect your portfolio, execute your strategies. Thank you so much for your time. We're going to talk soon. Bye for now.